you everybody for joining. We're delighted to welcome Will O'Brien, who's going to lead today's session. Will's the FD of two biotech businesses based in the Northwest. Earlier in his career, he had 20 years as a scientist and an engineer, and then moved into kind of corporate finance and is currently FD. He sits on the Bioindustry Association Finance and Tax Advisory Board. And he's often invited by HMRC to talk about changes to the R&D incentive scheme. And he's also set up since 2013, I think, isn't it, Will?
Yes.
A consultancy called
Not
WOCO.
quite 12 years.
Right, which is an R&D tax credit consultancy. So he's very kindly today going to talk through some of the changes that have been happening with the legislation, and how, if you're going through a claim, he can sort of give advice and insight on any challenges you may be experiencing. So he's going to kind of lead with the presentation. And if you have any questions, I think we decided, because of the number of participants, it might make sense if you can pop them in the chat box, and then we can address them at a time that makes sense. So we're not sort of, all interrupting Will as he speaks. And so with that, I will pass across to you, Will. Thank you.
Thanks very much, Chris, and thanks for inviting me back. It's always nice to be asked to come back to make a presentation. So, yeah, you've pretty much given a very great summary of my sort of background. So I do sit on this sort of process from both sides of the fence. So I'm, in my role as FD for a couple of companies, we obviously make substantial R&D claims, and I have done for a number of years with the businesses I work with. And then through WOCO, obviously that's my sort of probably the other half of my time spent advising specifically on R&D tax credits. So I think without further ado, I will share my presentation so you don't have to look at my face all the way through. All right. Okay, so does that look, everybody can see those slides okay, I take it?
Yeah, all good.
Yeah. Computer is not advancing the slide. There we go. So there we go. It's pretty much what's just been said about me. I suppose the other point to make is my background is, with a degree in neurophysiology. I've worked as a software engineer. So I'm not an accountant. So I always work hand in hand with sort of accountant partners. But it means I'm coming at this usually from, the perspective of an R&D person rather than a simple, accountant tax return side of things. So what I want to talk about this afternoon, two sort of chunks I wanted to cover. There's so much going on in R&D generally, which I'm sure those of you who've made claims are sort of seeing. It's a hot topic area. There's a lot been discussed about it. So there's some new schemes coming through, what they call the new merged simpler scheme, which of course is neither merged nor simpler, with some new quite significant rules that are being introduced. So I want to talk a little bit about those, just to give you a flavour for what's going to be happening for claims where your costs are starting really from this year, this April. Something else I want to talk about is HMRC inquiries. There's been a sort of big compliance campaign. I don't know how many people in the sort of audience have run into issues with inquiries. It's something that, if you're experiencing it, you'll probably be quite interested to know thoughts on what the process involves, maybe what you can do. If no one's interested, then we can spend more time talking about the basic scheme. So put your thoughts in the chat if you want me to spend more time talking about the meat of the schemes versus the inquiry side of things. I am assuming that you've got some basic knowledge of the R&D tax credit schemes. I'll give a very sort of running summary just now, but I'm assuming if you've not claimed, you're aware of the schemes. Again, when I started doing this 10 plus years ago, it was very common to find people who hadn't even really heard of R&D tax credits. That's really not the case anymore. So I generally expect you to have a decent grasp whether your company does R&D, what's involved in claiming. I'm assuming you probably wouldn't be coming and listening to me talking if you didn't have some connection with R&D yourselves. So where are we actually up to with the scheme at the moment? Very briefly, so these are a scheme that's been introduced more than 20 years ago now with the aim of driving innovation. It's turned into two broad schemes in the most recent years, what they call the SME scheme. I refuse to say SME scheme like most people seem to, and the RDEC, the R&D expenditure credit. In order to make a claim, and there's large numbers of rules and ins and outs, but the fundamentals come down to what HMRC would refer to as the gateway tests, which is, have you made an advance in science or technology? I've added a line to my presentation from when I've done this before. HMRC talks a lot about the idea of a baseline. So making an advance, you got to define where you came from and where you're trying to get to. In order to make that advance, there has to have been a resolution of uncertainty. So again, it can't just be a routine operation for you. And again, that resolution of uncertainty has to be carried out by competent professionals. So people who aren't just learning about the subject, themselves or for their company, but are people who are well established in a particular field and know this isn't something that was possible before. And they're very keen to know and show that you understand where the R&D starts, so where you've decided there's a project that needs to be done, and when you've reached the end of the project and either decided you've failed or you've decided that this is something that you can turn into a commercial product. The Bible for this is what we've always referred to as the BIS guidelines. Then was the BEIS guidelines, and now it's apparently to be called the DSIT guidelines. Again, these departments, government departments, change their name every week. And again, the CIRD 81900 is HMRC's internal document that summarizes the sort of Bible on what is R&D, what's going to be allowed to be included in a claim. So that's as much as you like as I'm going to say at this stage about how what's actually constitutes R&D for making a claim. Where are we up to at the moment? I think if you've been following this in the press, there's a widespread perception that the schemes have been abused. Examples in the press of people claiming for a new croissant recipe, or for care homes claiming, people claiming for new ladders upside the buildings, and all sorts of bonkers claims. It's HMRC and the Treasury used a number of statistics to decide what they thought was working in the scheme. And I think probably the polite way to put it is that they're using incomplete data. So there was a change to the scheme where they decided that large companies were getting better value for the sort of country as a whole based on the R&D, what they call the additionality. So how much extra money was generated for every pound that was spent on an R&D tax credit. I think it's pretty clear that that data was across the entire economy. It didn't focus on specific sectors. So it assumed that companies like the care homes and all those other businesses were in the same sort of category as a life sciences business or an AI, technology software business or something like that. But there's certainly been this sharp criticism of HMRC by MPs, by the press and public, that they've been allowing dubious claims to come through. Generally not a good look for HMRC. They had their accounts qualified multiple times because they couldn't quantify just how much of the R&D claims were legitimate. So what we've seen over the last number of years is lots of attempts to sort of deal with this, because the R&D was getting very expensive. So the cost has gone into the billions. So it's become a much more significant issue than some sort of obscure tax relief that's more about enhancing certain kinds of behaviors. It's now becoming a big number, so it's sort of high on the priority of the politicians. So we've seen legislation stage. I've got a slide coming up in a minute just to give us a flavour of quite how much has changed on the law. HMRC has come in, wildly swung from doing very little and letting nearly every claim through without really looking at it too closely, to challenging almost everything. And when faced with an inquiry, now not following their own rules, not letting things through that are perfectly legitimate R&D, making life very difficult for everybody, in an attempt to crack down on what they see as fraud and error in the system. It's certainly going to make, if you look at this, there's an annual statistics package published on R&D. The last one was in September, which covered the year to 22, and like nearly every year previously shows the scheme getting a bit bigger, more, I think, I can't remember whether there were more claims, but there was certainly a higher cost to the scheme. I can, without, putting my sort of, looking at my crystal ball, I'm almost certain the next time those statistics come out, there will be a massive drop in the numbers of claims and the value of those claims. I don't think we're going to know what caused it. I think there's been so much messing around with the system with HMRC's behavior and the law changes. It's going to be very, very hard to work out what's happened, but it could well result in, the scheme costing a lot less and becoming less of a hot button issue for the politicians. Just to give us a flavour, this is in the last 5 years. So starting to, so these aren't all things that have actually come into force yet, but the announcements that have been made. Firstly, there was a cap on the SME payments through the scheme. Then there's the restriction on overseas expenditure was brought in. Then the Chancellor completely slashed the relief, almost cut it in half for SMEs. Then there was a climb down, and the concept of an R&D intensive company was introduced, which didn't quite restore things to where they were, but it improved things for sort of R&D intensive businesses. There's now a new merged scheme that integrates the two previous schemes that we had, the FME scheme and the RDEC scheme. Added to that, we've also had extra bureaucracy from HMRC. So there's now a process where you have to notify in advance if you want to make a claim. That doesn't always apply. That tends to apply where you're making a claim for the first time, and was really trying to track down on dodgy advisors, persuading people to make a claim going back for the maximum 2-year period when they'd never even been aware of the scheme at all. And there's what's called the additional information form, which has been enforced since sort of last August, expecting a lot more detail when you submit a claim. So up until that point, you could pretty much claim, just put the numbers on your tax return, and legally that was all you had to do. HMRC would very often come and ask for details if you didn't put any details in with your claim. And for someone like myself doing R&D claims, there's actually nothing in this additional information form that we weren't already putting in our standard reports. But it's nice to see a little bit of standardization from that perspective. Okay, so I know I'm bombing through this stuff, but I want to first now just take a breath and look at the new scheme. So this has just been put into law. The Finance Act was just received royal assent in the last week or so, I believe it was. So what does this scheme now look like? So this is the scheme that's going to apply from this year. And just to keep it nice and straightforward, they've still called it R&D expenditure credit. So it is effectively now RDEC now applies to all companies, large and small. The rate is actually the same as the RDEC rate was put up to last year, which is 20%. So 20% of qualifying expenditure, which after the 25% tax rate, nets you about a 15% benefit on the scheme, which again, as we'll see, that's a substantial drop, certainly for SMEs compared to what they've been used to over the last 10 years or so. The scheme really does, I think the reason they've kept calling it R&D expenditure credit is, although it's a new piece of law, it's pretty much a cut and paste of the old law in most ways. So one of the advantages of the RDEC scheme is that it doesn't change how much it's worth based on whether you're profitable or loss-making. So you can still take a payable credit. So if you are making a loss, you can collect a payment. The cap on payments is still there, but what they've done is they've carried over the cap from the SME scheme, which is a more generous cap. So you can have 3 times the PAY expenditure of the whole company included in the cap, rather than just the PAY and national insurance of the relevant employees, which was the previous rule on R&D. The basic criteria, and you see there's a star on this because there's some major new exceptions I do want to talk about, but the basic criteria for what is R&D is unchanged, and the basics of what costs you're allowed to claim is also largely unchanged. So, as I said before, this will come into force, and again, these new rules where they are big changes to the law rather than changing just the rates, is they apply to accounting periods starting after the 1st of April. So the scope potentially to move your accounting periods if you want to claim under one or other schemes. What this means is there's going to be a period where there is not one scheme, but there's 4 potential schemes that you can claim under at any one time, active, depending on what you've been claiming previously. Some of them, the last minute changes to the Finance Act were put in to avoid some double claiming weirdness in the scheme, where you've got companies working with each other with different year ends falling into different periods. So there's a load of stuff that will sort of drop away in a couple of years' time to stop companies basically double claiming, because the rules on who can claim when you've got a chain of companies involved has changed quite radically. So this is the scheme that most companies will get to claim under. And as I said, it's a lot less generous than we used to have. What we've now introduced, so this was the sort of climb down from the Chancellor last year, when they realised, when there was an uproar, when they cut the scheme in half, particularly by companies, you know, startup businesses, life sciences businesses spending huge amounts of money developing something new, so making large losses, and you know, spending a lot on and receiving a lot of payable R&D credits. You know, this was a massive shock to the system, and it was done at very short notice. So within a couple of months, this idea of an R&D intensive company was introduced. So it's a totally new concept in law, and this is where a business claiming R&D tax credits, if it spends more than 40% of its total cost base on as qualifying R&D, it gets to move into these new R&D intensive rules. Now, again, we're in something of a transition. So the rules as of this minute, so if you're in an accounting period right now, it's sort of a bolt onto the original SME scheme. So at the moment, what happens is the SME scheme, you get enhanced, you enhance your costs in R&D. Used to be 130%. Now you add an extra 86% of your costs as sort of additional costs that you can use to reduce your tax bill. That hasn't changed. And then it used to be, if that drives you into a loss-making position, you can cash in the credit. It used to be at 14.5%, and then the cut last year cut it to 10%. And it was the effect of going from 130 to 86 and 14.5 to 10 that caused the overall value of the scheme to drop so radically. What's happened now is, if you're a loss-making company, the 86% enhancement is still there, but you can now cash your credit in at the 14.5%. That works out at, for a loss-making company, something equivalent to 27% of your R&D spending as a benefit, which sold by our politicians as that's a big uplift. Of course, that's actually, the sharp-eyed among you will recognise it used to be 33%. So this is just a slightly less bad reduction of the scheme for the companies who qualify for the intensive rules. That 40% is actually dropping to 30% from April this year. So again, as the new scheme comes in, one of the things you have to think about now is this equation to decide whether you've reached 40% or not. And it is across the entire economic group. So if you're a group of companies, you can't just hive all your R&D into one business and say that's the R&D and it's obviously over 40%. That does include overseas companies, but you don't have to include the overseas company costs. It only counts costs that are basically brought into the UK tax system. So although an overseas parent won't affect you from the perspective of the total number, if you have, for example, a common sister companies owned by an offshore parent, those sister companies will have to be all brought together to decide whether you hit the 40% and then later the 30% trigger. The line I've put there about the 65% adjustments, it's easy to look at 40%, and if you're an R&D focused business, to sort of think, that seems pretty low. I shouldn't have any trouble reaching that. But actually, it's not as straightforward as it looks, because if you are a so-called virtual R&D company where you maybe don't have that many staff of your own, and you're outsourcing a lot of the R&D work to development companies or manufacturing companies, or all the sort of what's called the dispersed R&D landscape, you only include 65% of your subcontracted R&D costs or your externally provided worker costs. And it's the 65% figure that goes into the top of the equation to decide if you hit the R&D intensive criteria. So actually, with a few extra costs, for example, IP costs, patent costs come in there, you can start getting quite close to the 40% without realizing it, even if you think that all you do is is R&D. And we've seen a couple of examples where we come a little bit close. So as I said there, the rule changes to 30% from April 24. And there are some rules that have been introduced to try and stop you bouncing backwards and forwards between the two schemes. Because there's obviously, if someone's hovering at sort of 41% of total costs one year and 39% the next year, there's a risk that, you know, you're going to completely switch over between what is effectively two completely different sets of laws. When you look at the wording, the R&D intensive scheme looks basically like the old SME scheme, pretty much as was. And then if you go the other way, you're pretty much in the RDEC scheme as was. So they've tried to smooth that out a little bit. And generally speaking, a one-off event probably won't tip you sort of out of this scheme, unless, you know, that happens to repeat in a subsequent year. There's someone's name's popped up on my screen. Is that a question or just a note? I'm not sure.
We've got a couple of questions, but they're specific about inquiries and allocation of costs. So I don't know.
Okay, maybe we should come back to those as we've gone a bit further then, I think, because yeah, I'm going to start talking about some cost stuff now.
So it'll be covered. Okay.
Yeah. Okay. So where I'm taking quite a long time on this, two of the big changes to the scheme are restriction on overseas expenditure, which has been talked about for a couple of years now. This is now coming to pass. Basically, any work that you do that is subcontracted or through an externally provided worker has to be done in the UK, with only a few exceptions allowed. This is not just saying, well, I'm employing a UK company and therefore it's okay. You need to potentially get quite involved with your subcontractors to understand where they do the work. And again, something like clinical trials, biological development work, this is, you know, it's not a straightforward question, and it's going to create quite a bit of work to figure out, you know, where your partners are doing the work. And it is important to know, you know, what, you know, they're trying to restrict things like people going to low-cost software development teams in Eastern Europe, for example. There are no restrictions on the other kinds of cost, which does again throw up some interesting anomalies. So staff costs, consumables costs, software and clinical trial participant costs aren't going to be restricted by overseas. So you can buy your consumables that go into your R&D from anywhere you like. If your staff go traveling as part of doing the work, that's okay, so long as they're still paid through your UK company. And again, potentially there are scenarios where you might be running a clinical trial. Some of the work overseas does not qualify because you could have done it in the UK, but you chose not to. But the payments to those volunteers overseas would be included, even though the sort of work of conducting the trial and getting the medicines to those people wouldn't be allowed. So there's a couple slightly weird sort of things get thrown out by these new rules. The exemptions, and they have put some very interesting guidance together on this, so I'll highlight a little bit later on. You can only qualify for overseas work if it was wholly unreasonable to reproduce the conditions in the UK, which again, I'm imagining this is going to create lots of arguments in the future about exactly what that means. So you're allowed to consider things like geography, you know, if there are particular diseases in countries or there's particular, the example HMRC gave in the first example was if you're studying volcanoes, there aren't any in the UK, so you'd have to go somewhere else to look for volcanoes. They have now got some slightly more meaningful examples than that. Things like legal regulatory requirements, and very importantly, time pressure. So if it's not possible to do it in the UK simply because of the sort of commercial pressure of trying to get your product to market, that is a factor you can use. But the thing you cannot use is the availability or the cost of the workers themselves. So there's a couple of bits where they overlap, or you have to be very careful to say, you know, nobody applied for a job in this country, therefore we had to recruit someone in America. It's not that those people don't exist here, they're just not available, and therefore you couldn't count them as, you know, you couldn't use the time pressure argument in that case. But if you were trying to conduct a clinical trial somewhere and you just weren't getting enough patients without covering more than just the UK, you're probably going to be okay. The other big change that will affect probably a lot more people even than the overseas restrictions is what they're calling contracting out. So used to be referred to as subcontracting. For some reason, they've stopped using the word subcontracting because that means something else, and they're talking about contracting, where one company is paying another to be involved in the R&D. This has caused masses of, arguments. HMRC have used this to reject lots of claims on the rules on whether something was subsidized, whether it was subcontracted. The new scheme has done a fairly decent job of trying to clarify this and set up a new set of rules that hopefully make it a lot easier to decide who should be actually making the R&D claim if you've got a number of companies getting involved. And with all these things, there's going to be winners and losers from this kind of thing. So the main thing you have to keep in mind is the customer, whoever decides a piece of R&D needs to be done gets to make the claim. Rather than, so if I've paid a company to make something for me, I didn't realize or didn't know that R&D was going to be needed for them to deliver that thing to me. I've not made the decision to do the R&D, therefore I don't get to claim the cost in my R&D claim. There are some very detailed rules that sort of, if you follow the detail of the R&D world, the Quinn London case sort of upended things for HMRC because they lost a case where someone was doing work under a contract, but the contract was nothing to do with R&D. It doesn't necessarily affect historic claims because they're still saying the old rules are the old rules, but this has made it a lot more straightforward. So for an example, if you were a contract research organization doing work for a drug company, you can't claim because you didn't decide to do the R&D. So if I'm conducting a clinical trial for AstraZeneca, AstraZeneca is going to claim because they're a British company and they've subcontracted to me. If, on the other hand, I'm an electronics manufacturer and I've been contracted to make a new widget that fits in my box, but I'm not interested in how the widget is packaged into the box or how it performs, potentially that downstream manufacturer might need to conduct some R&D in order to meet the sort of specification they're trying to deliver to. So far too much to talk about in great detail now. It does, as far as I'm concerned, at least put some defined rules down, so you should be able to know more clearly which side of the fence you sit. And the final exception is if your customer is not eligible for the UK RDEC, which is generally because they're either the government, a university, or they're outside of the UK, you sort of go to the old rules, which is where you can now, as the contractor, make the claim. And there's quite a lot of reference in the guidance to how things were in the old rules and how you'd still be able to keep claiming if your customer was outside of the UK. Okay, I hope I'm not dashed too fast through this. I'm just sort of aware of the time. If you ask me what do I think of this new scheme, I suppose it's not any simpler. I don't think any tax simplification ever made tax simpler, not least because all the old rules tend to stay there and you get a whole lot of new ones. I think some of these issues over subcontracting, the subsidized rules have gone altogether. So if you received a grant, for example, you don't have to worry about that making your claim worth less. I mean, your claim's just worth less anyway, but that has been simplified. And a couple of bits that were very complicated to administer have just been taken out altogether. It is a less attractive scheme, and we're already seeing the consequence of that. Although the government says they want to be a powerhouse for research and development and innovation, we're already seeing companies making the decisions that it's no longer as attractive to do something in the UK. Contracts, people plan work years in advance. One of the companies I'm finance director for pretty much already decided its current clinical trial is running in the UK. Its next one is not going to be in the UK. It's not the only reason. It's not simply because of the tax, but that incentive is just not there anymore. Add to that the sort of hassle and pain people are going through to make claims. You can sort of see this damping down effect. So I don't know whether it's actually going to achieve what they intended. There is likely to be a change of government, or there's certainly an election coming this year. All I can say about the Labour Party's position on this is that they have said their view, and they sort of, obviously they're the ones who introduced the R&D tax credit in the first place, so they sort of believe in it and have said they intend to keep the current structures as they are. So there might be some scope for them to tinker with rates, but I'm hoping that they're not going to start introducing a whole load of new rules. I don't think this will be the top of their inbox if they do come in towards the end of the year. And the other thing that is positive, to give HMRC credit where credit's due, there's some really good guidance now that's available, and it gives much more detailed examples of what is R&D. So there's this one here, the GFC Guidance for Compliance 3. It's well worth looking at if you have anything to do with R&D. There's some more guidance on the new rules. These overseas and subcontracting rules have been sort of broken down in massive detail, hopefully making it, I do wonder whether HMRC's own people have read these, because you see people who answer questions and inquiries who clearly aren't aware of them. But that's just a training issue. And I think over time, they have recognised that the guidance that we've been sitting on for the last however many, I don't know how old some of the guidance that's on their website is just not fit for purpose, doesn't reflect how companies really do R&D. It's not big mega corporations like IBM with these massive integrated teams doing R&D anymore. So they have finally started to understand the sort of need. This new guidance on overseas restrictions, for example, BIA, the committee I work with, we submitted some examples of how overseas subcontracting works in the clinical trials industry. Those examples have made it into the guidance verbatim pretty much. So it does show that they're listening. Right, I have definitely taken longer than I expected to, but I'm going to just spend a couple of minutes talking about HMRC inquiries. Subject close to my heart, because it's something I deal with a lot. The issue we've seen over the last probably year, but certainly until end of last year on, was a big campaign by HMRC to challenge lots and lots of claims. What you may have noticed if you have received any of these notifications is there are two departments within HMRC driving these claims, so-called ISBC and WMBC. Although it sounds like ISBC stands for, I think, Individuals and Small Business Compliance. WMBC stands for Wealthy and Mid-sized Business Compliance. And you also have a large companies unit, which is generally full of intelligent people who you can deal with normally. ISBC is the department that's causing the most controversy. So they've wheeled in huge numbers of people from outside of the R&D departments, people with no real experience of R&D, and they're sort of following a case flow system. So you don't get a named worker when you're dealing with your claim. It makes it very difficult, huge inconsistency. Every letter looks like it's been cut and pasted from about 15 other ones. When you reply to a letter, there's no chance really that letter is read by the person who wrote the first one that you're replying to. So it does make this process very, very disjointed. And you'll know whether you're on which team you're with, because the letter will say so. But if you're with WMBC, so anecdotally, the experience is a lot more pleasant than if you're with ISBC. First thing to do, what happens when you get that letter, your heart sinks. You see you've had an inquiry opened into your R&D claim. And the first thing, to say as an R&D advisor or someone in this business is really think hard. Did you have a legitimate claim? If you're not sure about your claim, if you think, maybe that shouldn't have been done, the earlier you hold your hand up and try to sort it out, the better, frankly. Apart from the fact you'll avoid clogging the system up with people who've got legitimate claims. The earlier you sort of cooperate with getting things sorted out, the less likely you are to have penalties imposed. And there are a lot of companies, I'm seeing lots of companies who claimed in good faith where an advisor wrote a report that was frankly nonsense and had gone through and been paid out. People assume that just because I got paid, it must have been approved somehow. And that's just not how it works. So do ask yourself those questions first. You also ask yourself, why us? Why did we get this letter as opposed to anybody else? The only thing, I don't know the answer to this. I don't have the seat inside at HMRC, but what they are saying is that every inquiry, certainly these ones we're talking about, ISBC and WMBC, are risk assessed. So somebody has looked at them and decided there's something about it that they want to look into. So it might be that there was no report provided. It might be that they read the report and didn't like it. It might be, there's a number of reasons, but it will have been looked at. It's not completely random in that case. There are a subset of inquiries from what's called the FIS, which is the Fraud Investigation Service. There are a lot nastier letters if you get them, where they basically say, we think you've committed fraud by claiming R&D. they're largely based on the business's SIC code. So if you're a business that's not in an area you would typically expect to see R&D, and it's quite interesting. Sometimes companies haven't noticed that their SIC code is way out of date or is nothing to do with their business, and it's never really been an issue before. So it's worth having a look to make sure your SIC code does actually match up with, you know, the market you're in or the kind of products that you're making. And then there's a very small number of random sampled claims go through as well. There you go. It was a toss up between Dad's Army or Hitchhiker's Guide as to what I put on here for the don't panic. I think this is a slow process. They've generated masses of inquiries, which are causing masses of pushback. So it's suddenly grinding to a halt. It's very slow. But again, that's, you know, don't panic. They're pushing you very hard to respond quickly to letters, which unfortunately you have to do. But it's not, you know, don't be bounced into admitting something or giving up on a claim and causing, you know, big costs to come through to you. What you'll tend to see in an inquiry is this first letter, which basically says, we're opening an inquiry, we'd like this information, please. Half the time, even if you've already sent them a report, they'll ask for all that information again. You've got to respond within 30 days. Generally, that's a very generic letter. It's unusual to see anything specific to your company in that letter. You have to respond to that. You might get a couple of back and forth, but generally the next step at the moment, certainly on the ISBC campaign, is they will then send you a pre-decision letter, which 9 times out of 10 says, we don't think you've got R&D. Please disagree with us if you'd like. You've got 30 days again to disagree. They also ask what's called the behaviours questions, and they're quite important because they are used to decide what kind of penalty they're going to impose, if any, on you. So it asks things like, did you use an advisor? Why did you use that advisor? Were you aware of the law itself? So you can't avoid answering those questions, and you do need to think quite carefully when you answer them. The pre-decision letter, what I've found from talking to HMRC is their system automatically auto-generates the closure notice on pretty much the same day. And it sort of hangs like a guillotine over you. So if you don't respond to the pre-decision letter, automatically the closure notice will come out basically saying, right, we've removed your claim and we're going to penalise you however much of, you know, a percentage of the tax that you owed. It's not impossible to stop those coming out. Obviously, if you're involved in the process and you engage legitimately and sort of constructively with them, then they're not just going to fire that off at you quite so willy-nilly. And again, the penalties in, you know, the good old days when I was doing this 10 years ago, if you had an inquiry with HMRC which ended up disagreeing on something, it was very unusual to see a penalty applied. It would just be a sort of regarded as a good faith disagreement on the rules. Now they are pretty much jumping by default to saying it's careless behaviour or possibly even deliberate behaviour, even when you've used a specialist advisor on the R&D, or even when your accountant has used a specialist advisor. That is being challenged quite a lot because it's pretty unfair. We're seeing a bit less of it at the moment, but it's something to watch out for, because obviously if you accept a careless or a deliberate penalty, it affects how many previous years they can go and investigate if they want to do what's called a discovery assessment next. So how do I respond when one of these letters turns up? It sounds like talking to my children about doing exams. Answer the question, read the question and answer the questions. They are asking, even when it's nonsense, try to answer the questions that they've asked. Just because if you provide what you think is a different report, or if you say, look, I've already said this in my report, and send your R&D report again, you're just going to annoy them apart from anything else. And the chances are they are asking some specific questions. So it means you've got to try not to open up another fishing expedition. So don't start talking about, you know, how you were subcontracted to do the work or how you had a grant. If you haven't, you know, obviously, if there are things you have to disclose, then you should, but don't raise what may be irrelevant questions that just invite it to go down another rabbit hole. It's quite frequent. HMRC have understood the law wrong. You know, they will ask you for why. Can you explain why the uncertainty? It was not possible to resolve the uncertainty by a competent professional, which of course that's not what the law says. The law says whether it was readily deducible by a competent professional, not whether they could deduce it at all. So there's things like that you've got to watch for, that they're clearly misquoting the law itself. If the request is unreasonable, you can push back. So sometimes they're asking for just massive information when a sample of that information would be acceptable. there's a bit of a difference between the informal questions that they ask you or a more formal legal notice, which you can actually have a formal legal recourse to challenge. But even so, you do get some engagement from them if you come back to say, we're not prepared to go and look through every one of our 3,000 invoices, and we're going to send you a sample of 5% of that sort of thing. Get the advice of this. Usually in a talk that I'm making like this might be the point where I'm sort of pitching for my own business, but I'm not really sure I am here. I don't really want to get involved in many more inquiries. I bring in external help if I'm involved in inquiries, because it's not something I enjoy doing. It's fair to say. But what sometimes happens, we get brought in when someone's on the sort of second or third letter with HMRC, and the things you've already said are sort of painting yourself into a corner. So if you've not really understood the rules and you're insisting on saying we made an advance in software development or something like that, you're really making it very difficult to resolve the inquiry. Combine that with my previous point about saying if you have to own up to saying that this isn't good enough, we're going to withdraw the claim. The earlier you do that and the earlier you really make sure you understand whether this claim was valid or not, the better. That new guidance I was talking about, the guidance for the compliance street, is a great place to start. If you're not sure whether what you've done is qualifying, you can read through that, and that really does, it expands it. It wasn't, a lot of the inquiries coming now, that guidance wasn't in place at the time when you made your claim. So theoretically, you shouldn't have to be held to the standards in that guidance. But it is actually quite helpful. There's sometimes it's actually beneficial to point HMRC at that guidance when they don't seem to be following it, because it's much more clear cut about things that are or things that aren't R&D. If you're not happy with the outcome, what can you do? And again, there are lots of things that you have the option to proceed. This is not a simple, straightforward process. Well, I've not said you can withdraw your claim, of course, but if you do that, I'm selfishly hoping people don't withdraw applications that are legitimate pieces of R&D. And lots of companies are deciding for the amount of money at stake, it's just not worth the pain and hassle for 20,000, 30,000 pounds of credit. Of course, every time somebody does that, HMRC says, look, we found another crook, and it goes into their figures for fraud and error, even when actually they've effectively just bullied somebody out of making a claim. But coming back to assuming you are sticking with it and really do believe in your R&D, you can appeal. That's the first thing, but you do need an appealable decision to make an appeal. So either you have the closure notice issued to you, or, and it's quite rare at the moment, what's called a Schedule 36 notice. So that's where they've asked you for information, but it has legal force. So that's one you can't ignore. But because it has to be a reasonable request, it has to be enough information for the HMRC officer to reasonably assess whether the tax claim was correct. If they come back and say you have to provide us with literally everything off your accounting system for the last 3 years, you can appeal on that sort of a basis. What happens when you appeal is first HMRC will have another look at the case. They might decide at that point that you've got a point and change their mind, or you can choose a statutory review. The SOLS is the office within HMRC that will do that. So that's again somebody else in HMRC who's not been involved in the case so far will take another look. I think it's quite unusual that they will disagree with their colleagues, but it is an option available to you. Or you can appeal either after that or directly to the first tier tribunal. And obviously every one of these steps is getting more and more time consuming and frankly more and more expensive to handle. The other option that you have that's looking the most attractive at the moment is what's called alternate dispute resolution. This is where you're not happy with something that's been done in your, how HMRC has handled your case. You can trigger that at any time. And when you do that, it puts the inquiry on hold until it's resolved. What that will do is it does require a commitment of time. The actual process takes a full day through an online meeting where you, HMRC and a mediator effectively get together to discuss the detail of what you're disagreeing on. R&D is something, even when they've rejected your case outright, because R&D is such a complex, subjective area, it's generally ripe for an ADR conversation. The chances are, if you've been dealing with ISBC up until this point, they will not talk to you. They won't have a conversation. They won't set up a meeting. They won't have a Zoom call with you. They literally say, there's nothing you can say you can't write down. And therefore you're forced into trying to summarize your competent professionals, 20 years of expertise and PhD knowledge into a piece of paper that someone at HMRC may or may not have in their mind at that moment to answer. So this is, at the moment, seems to be the best way to actually get that conversation. So if you're confident in your R&D claim, this is a chance to actually have a bit of back and forth and a bit of allowing somebody who understands the R&D to explain it properly and in the right kind of terms to somebody on the other side. Because it's so popular at the moment, it's suddenly slowing down. So it's probably going to take 3 or 4 months before you even get this process going now. I've got 2 ongoing at the moment, which I haven't actually managed to, get further than an initial conversation with the mediator. But they did tell me that their biggest customer at the moment, because ADR it's still a part of HMRC, but it is sort of pseudo-independent. Their biggest customer is ISBC, unsurprisingly, at the moment. So this sort of campaign has triggered a lot of these, but shouldn't put you off going through this process, because it does seem, and it doesn't mean you've automatically solved the claim at the end of the day, but you should manage to move things forward to a point where you can end up agreeing something, which is sort of how inquiries used to work before this most recent sort of set of changes. Right, so I'm sorry I've taken miles longer than I thought to talk about that, but I'm hoping that was of interest to people. We still seem to have a fair number of people connected to the call. So are there any questions at that point?
Thanks, Will. That's a lot of info. Really helpful. Although some of it did go over my head, to be fair. But there are some questions. We've got Joanne Crichton. I don't know whether I just read them, or this one's pretty to the point. Is the rule on the customer having to claim only applicable on the R&D intensive scheme? Did I understand correctly that this doesn't apply under the RDEC scheme?
No, it applies to both schemes. So the new rules on subcontracting and overseas expenditure applied to both schemes, which again is simpler. So yes, so an R&D intensive company can now claim grant funded work, which is a big step up that they weren't able to do before.
I think some of this may have been covered, George. I don't know whether George is available to just clarify, but he was just asking for covering allocation of costs by period when the rules change. SME changes, is that a higher claim, for example, Q1 versus Q2, Q3, Q4? And how much scope is there for wedging costs into Q1? I think, did you cover that maybe?
Yeah, it does depend on whether you're talking the change from the old scheme to the new scheme is simply accounting periods before or after. So you're either in or you're out. When a rate changes, typically, I think this is quite common with when a tax rate changes, when the corporation tax rate changes, it's not just to R&D, you tend to just apportion it by day. So typically, I think unless you have exceptional reason to say all our cost was in the first 3 months of the year, which happened to be the first 3 months before April, you would generally just do a pro rata division of the costs and of the credits and so forth. It is quite complicated in the calculating a payable credit in particular. That doesn't work in an intuitive way. It's probably more obscure to talk about than I can go into detail now. I'll probably send everybody to sleep. But the way that you get to the point where you have what's called a surrenderable value is a little bit strange. And frankly, you just let the software work it out for you. So at the moment, because the rate has gone down, it actually works in our favor. You get more converted at the older 14.5% rate than you think you might have done. But generally speaking, if rates change, you do a straight apportionment. If the scheme changes, it's either your whole accounting year is in or your whole accounting year is out. And that doesn't stop people changing accounting year ends and things to try and fit if they think one scheme is more favorable than the other. There's nothing to really stop you doing that, unless you were doing it in a very egregious tax avoidance manner that they might come and have a look at.
Sorry, can I clarify on that? Because it's my question.
Yes.
Sure.
So or just a follow-up, clarify maybe more for me than anyone else. But if, for example, I'm claiming based on costs of employing people, presumably, you say straight line for costs which may not be apportionable, but if someone's only worked in the first half of the year, then half of it's in Q1, half of it's in Q2, none of it's in the rest.
Yeah. the default position that your accountant will then tend to take, and I'm not again, I'd have to sort of drill into whether this is the way you're meant to do it or just what's regarded as the accepted way, is you do just apportion it. So in that scenario, yeah, where you got somebody who left halfway through the year and they happen to leave on the boundary of a rate change, it would create a discrepancy. And when the rates go up, maybe they'll go up in future. Those discrepancies sort of swing the other way. But the default approach is, unless you're going to mess around with the year end, I mean, that's the other thing you can do. But again, you'd have to have a lot, that would have to be a big issue for you to justify messing around with your entire financial accounting reporting, just to make sure that you included somebody in an R&D claim. But the default is, and again, I'm not an accountant, as I think I said in one of my slides before, but I'm pretty sure you just do a pro rata based on the number of days division.
Thank you.
So I'm conscious of time because we're literally at the hour mark.
Yeah.
But Hannah Vukomanovic, sorry Hannah, I've just butchered your name. I've asked a couple of questions. I don't normally. I thought I'd just invite you to ask your questions, and then we probably do need to wrap up because just of time.
Oh, perfect. Thank you so much. We've got an inquiry at the moment from a year before my time, but we're going through it now.
I'm very sorry for you.
And we're taking advice from our accountants, but what's the chance that HMRC will go back previous years? We're currently getting it reviewed by the solicitor's office. I'm expecting fully that HMRC, it will come back that we still have to repay 2021. What's the chances they may go back to 2020 and before?
I mean, I haven't seen it happen very much, but the law on discovery assessments, obviously it does depend on whether they've decided it was careless behaviour or deliberate behaviour as to whether they can go back, is it 4, 6 or 20 years, I think it is. They have to have a suspicion that there was an underpayment of tax in the previous year. Obviously, if you've been making the same R&D claims year on year, potentially they could. There's not a lot of comfort to give there. They do. We're not seeing it, but it may just be because they are so swamped that they're just trying to get on top of what they've got at the moment. And again, if you pushed it as far as an appeal and you believe that the claim is worth having, if you end up with what sometimes is happening is they're climbing down and saying, well, you had 5 projects in your claim and we're going to let 4 of them through. And the company will sit there and go, well, I don't really see any difference between numbers 1, 2, 3, 4 and number 5. But you'll sort of take that as a win and just move on. In that sort of circumstance, it's unlikely they'd go back. If they decided that it was a fraudulent claim, they may well say, well, if there's been other claims, then we'd want to look at them. Again, it depends on the size of the claim and just how much you argue. If you are one of these notorious, it's a care home and you designed a new recipe for your staff, they're going to be unimpressed with that and may well want to go back. Again, I can't give a definitive answer. They can go back up to, generally by default, sort of 6 years is the worst case scenario. So that's 6 years after the end of the relevant period.
Thanks
so
very much.
We're not seeing that happen. So I don't know if that's very reassuring or not.
Thank you.
For a lot of companies, that sort of inquiry would be, terminal, frankly. And I don't think that's really in HMRC's interest, especially where people have been advised by, there are, obviously, I'm an R&D advisor, but there are people in this line of work who've been pushing claims that they probably shouldn't. People have gone along with that in good faith, and for that to put companies out of business just doesn't seem like the kind of news HMRC would want to be coming in on the back of, saving money on the tax credit scheme now. But if they put hundreds of companies out of business along the way, I don't think they really want to do that. Write to your MP, things like that. You have got options there. I didn't put that in my list, but that is quite a powerful one as well. If you're really getting into the mud, you write to your MP, who generally has a bit of a hotline to the Treasury, which can sometimes move it along a bit faster.
Thank you so much. I mean, we've literally run out of time. I'm sure there may be other questions, but we are going to share the slides from the presentation, and William's contact details are on there. So I'm sure as a follow-up to this, if people have got 1 or 2 questions, you'd be happy to
absolutely. Yeah. When we did this last time, I did get quite a few questions. It's always interesting to Obviously, I'm not can't give specific advice on specific cases, but if you've got questions about the changes and so forth, always happy to answer those sort of questions. Yes.